All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. It's challenge day. Ready to get off and rolling. I will not make a challenge trade here this morning. There's not a signal, and so nothing to trade there. But even if there were, I would not be trading it. We'll be kicking off here this afternoon. Let's get down to it. And here this morning, I want to take a look at some scan results, some of the crossovers that are happening, walk through the watch list, and some of the concept here behind the challenge trades. Now, those of you who were with us last challenge, some of the stuff that I'm going to say here today is going to be a repeat. For those that are new, that have been with us before, welcome. Great to have you. And there's a different mentality here when it comes to the nature of the stocks chosen to trade for the challenge and how they are run. The basic challenge philosophy is the same. That beauty of the challenge is the same. That looking for trend, using call and put options, and growing the account or growing the trade size as the account size grows. Those basic principles are still in play. But when it comes to choosing the stocks to trade, it's no longer, hey Jeff, what are you going to trade here today? And me going out looking and going, oh, I like this or I like that. All right, let's go get into this. Let's go get into that. And basically running through a million reasons why I like the trade, right? This is very systematic. It's algorithm driven. So what's that mean? It's data driven. And it is something where I can like something or hate something as much as I want. It doesn't affect the decision-making process here. Meaning, if I go out and we have a call signal on Under Armour, and I want puts on Under Armour, I'm going out and buying calls. Right? I'm running with the algorithm, and we'll continue to do that. So as we go through things and on video, you'll hear me talk about different things. I'll have opinions on different things, but I'm not trading those opinions for the challenge, and the challenge will continue to run, based on these signals. Now, the videos that happen here at 10:30 Eastern, 2:30 Eastern, they will be about 5 to 10 minutes each. I'm going to cut the length of those videos down. These videos are going to be trade centric, except for the one here this morning. They're going to be trade centric. In much more focused on just the challenge, not the challenge, and then let's go take a look at a bunch of other stuff. But over the course of the week, I will add a video or two here talking about just some of the other stuff that's going on out there, and I'll try to add some of that into things. But I'm going to cut those video times down, and that's simply a time thing. And one of the biggest feedbacks that we've had over the last 4 months is, hey, you know what, the videos are nice. Sometimes I'd like to just be able to click, watch a really quick one, and know what's going on with the challenge and move on. And that is something that I 100% agree with and will be implementing here. To some degree, it won't be perfect, right? But that will be a little bit of a change that you'll see over the course of this challenge. All right. Now the market this morning, it's off to a bearish start. We saw futures trade higher last night after Europe opened up, and then futures have pretty much been trading lower all morning since we got the GDP and corporate profits data. We have seen the markets turn back on down. But if we come back and we back this out to a 1 hour chart and look at this here over the last 3 weeks, I mean, we have had a market that's dead flat and in a relatively tight range, a 2% range, and just chopping through this 2% range, up and down and all around. Not a whole lot of trend, not a whole lot of new stuff going on out there. It's not like we can look at the market and go, well, today's materially different because of blah, blah, blah. And that's really been the case, here. for the markets now for a period of time. We do have the S&P, the small caps, both trading below their 7-day moving averages. You know how I feel about that in terms of, hey, you know what, I don't want to be an aggressive buyer in that situation. And, the path of least resistance tends to be to the downside, in those situations. The market metrics are neutral right now, threatening bearish. They are threatening bearish. We'll see how they, kind of form and play out here into the close of the market today. But that's what that's what we're looking at. And let's face it, as long as we see stocks like Amazon, which is on the challenge watch list, we can't trade it early in the challenge because the options are just too expensive. But later on in the challenge we can. But as long as we have stocks like Amazon that can't seem to get off the mat, the path of least resistance on the market's going to continue to be lower. And, you take a look at some of the better names out there, the Disneys, the Amazons, even the Microsofts, which Microsoft's up a little bit here today. But, Microsoft had some fantastic news last week, and it hasn't been able to go up on that news. And, that's just kind of where we're at, or the market that we're in. And, it's one of those where, is it an unusual market? No, not at all, right? If I come in and I just pull up the S&P and I take a look at what has happened in the market over the last several months, right, we can see lots of periods like this. I mean, there are periods of flat, all over the place. And, it's one where if we go back further in time, there are a lot more of these. And what we're seeing in the market is pretty normal, right? I mean, you take a look here, 2017. I mean, we had, this kind of July, August, September, October period of really just kind of flat, few chop days down, few chop days up, right? And then followed by a very nice trend. We had that happen here in 2016, 2017. We can come through all sorts of periods of time in the market where, there's just a flatness. There's not a macro catalyst to really drive things and, to drive big amounts of money into the market or out of the market. And that is a normal part of the markets, and one that, it's experiencing right now. Now, we can sit here all day till we're blue in the face and go, well, when's the market going to do this, and when's the market going to do that, or all of that kind of stuff. Or we can wait for the market to do what it's going to do and react to it accordingly. And when it comes to the challenge, that's what the challenge is looking to do. This morning, we have a 3-7 crossover to the upside, or had one. It's no longer there on AT&T. And let's just say AT&T had a 3-7 crossover to the upside, which it doesn't. My apologies, downside. It has a 3-7 crossover to the downside, right? It's not a challenge trigger. It's not a put signal, right? Why? Well, consolidation risk on it's very high. And so it's going to say, hey, you know what? We're not going to trade it right now for the challenge. I'm not going to go get into it. Doesn't mean it can't fall, but isn't set up. And so what you'll see is that as we go forward, when we get these crossovers and the consolidation risk is low, I'll go out and trade them. I don't really care what the macro headlines are. I don't care what Russia and Iran are talking about. I don't really care about the Democrats and Republicans here in the U.S. and all of that stuff. All that noise, that's a constant in the market. That will always happen. Yeah, will I comment on it? Will I talk about it? Is it a reason for, certain moves? Absolutely, right? But when it comes to the challenge trades, it is 100% driven by the price action and by this consolidation risk component that is out there. Now, when we go through the scans here and just take a look at the crossovers, right? And let me show them to you here this morning. We have the bearish crossovers, right? We have ConocoPhillips, Chevron, AT&T, and Valero. They all have downside 3-7 crossovers to them here this morning. If we take a look at something like a Chevron, you can see the 3-day moving average crossing down through the 7-day moving average here today. As it's been one that's held up okay. today taking it on the chin as oil breaks down, and you'll notice that three of the stocks here are energy names, right? Conoco, Chevron, Valero, and when you look at some of the other energy names that are on the challenge watch list, they already had their downside 3-7 crossover, right? The Halliburtons and the Schlumbergers, they already had those downside elements, and they've had some downside follow through here to them and are continuing to weaken here today. We talked about oil on the big pop day. You don't get record moves in oil to the upside during bull markets, right? I mean, it's just the long and the short of it, and we talked about it here on that day, and the overall demand equation doesn't change, and so we'll probably see it drift back on down, and that's what we've seen happen with oil, and so we are seeing the energy stocks showing up on this list and weakening. None of them would be signals here this morning, though, if we were starting the challenge here this morning. But if we come in here to the upside crossovers, right, we had a couple here, so let's see if they're still there. We had a couple. No, only Home Depot on this list now. But Home Depot has a 3-7 crossover on it, where the 3-day moving average is moving up above the 7-day moving average. This is something that could be a signal here by the close of the market today. We'll see kind of where that sits. But earlier we saw Pepsi with a 3-7 crossover. We saw Coca-Cola with the 3-7 crossover. These stocks are off their highs, but should they have their crossovers, they're potential challenge trades here, as we kind of go into this afternoon. Okay, all right. So nothing here on the board that I'm super excited about, but we'll see how things kind of change into the close. If we come and we look at all the stocks that are on the watch list, right? When it comes down to them, there's just stocks we can look at and go, look, we're not going to get a signal anytime soon, right? So, for instance, let's come in here to Amazon, right? We're not going to get a signal anytime soon on Amazon. Why? Well, Amazon made a new low here, right? And the challenge algorithm will not trigger call positions off of new lows. So if it has a 3-7 crossover to the upside, which, it's trading to the downside now, so the next crossover would be to the upside, it's not going to qualify as a challenge trigger because it's coming off of these lows, right? It could, it could, but it's a very slim chance. And so, okay, is it going to give us a downside signal? Well, no, we don't have a fresh downside 3-7 crossover. It's already crossed over to the downside. So I can look at something like Amazon and say, look, nowhere close to even signaling here today, tomorrow, probably not even into next week, and look at it and say, hey, just chances are slim, and, move on from it. Then I could look at something like an Arconic. And we go, Arconic, okay, the 3-7 is to the downside right now. The 7-day moving average trading below the 3-day moving average, right? And, the next upside crossover, we'd be coming off of a higher low. We could see a challenge signal here on the next 3-7 crossover to the upside. It would be a bullish signal and very much a possibility, right? It's not there yet, but it's one that's close. And as we go through the challenge, right, there are going to be stocks where we look at and go, okay, these are close. We could see the price action come in to give them a challenge signal. And other stocks that we look at and go, they're not even close. Something like an Amazon, it's not even close. Something like a Bristol Myers, we're not going to get any kind of bear signal on this anytime soon. We're not going to get a bull signal on it anytime soon. We're going to have to see it sell off more and then get an upside crossover to get a bull signal. So Bristol Myers, it's not one that's likely to signal anytime soon. Then there's a Caterpillar, right? Now, Caterpillar, when it had its 3-7 crossover down here, and we talked about it that day, it's not going to signal for the challenge because it's coming off of new lows. Doesn't mean it can't trend. It doesn't mean it can't move up big, and this one did move up big. But, not something we could chase for the challenge. All right, fine. Now we have the downside 3-7 crossover. The magnitude of this upward tick here was too much to trigger a bearish signal on this 3-7 crossover. But now we're coming down into a position where it's had a pullback. If it were to find a base here somewhere in 124, 125, 126, even 123, turn around, have an upside 3-7 crossover, there's a good chance we will see a challenge signal come into play on it, right? But there's a lot of ifs to that, and what kind of has to happen for that to happen. But it's a lot closer than something like an Amazon would, or an Amazon is here today. And so as we go through, we go through the different stocks on the watch list from time to time. They're just going to be stocks where, I scroll through and I go, it's nowhere even close, to signaling for the challenge. Where then I look at something like a Johnson & Johnson. This is really close to signaling for the challenge. We can get a bear signal on it as early as this afternoon, right? Very, very close there. And stocks are going to go through that. They're going to go through that. Hey, a lot of chance of having a lot of, signaling, and no chance of signaling here, simply based on the crossover action that we see in them. Now, there are a lot of stocks like Coca-Cola out there right now. Where if you put on the Bollinger Bands are in this kind of contraction mode, right? And there are a lot of stocks out there, and I always like watching these stocks that are in these contraction modes, because the next move is going to be a nice trend, and it's always a wonder of how long is the contraction going to last. But as soon as there's sign that the contraction is over and we start to see a move, the move tends to be pretty nice and tends to be pretty strong. And we are going into a time of year where we tend to see some strong trends emerge in the market. But we are still kind of end of September, early October in no man's land here. So it'll be very interesting to see how these signals evolve. But again, it's not, hey, Jeff, do you like Coke? Well, you know what? How can I set up a call trade? Do I set up? No, it doesn't have a trigger. Not going out and setting it on up here. Now, the challenge spreadsheet, I shared the link in the message feed here today. I have not added the videos from earlier this week yet to the spreadsheet. Those will be added here today. So look for those. We'll have one on the ATR, one on challenge setup and execution, and one on the watch list that you'll be able to access there and get more information if you're curious there. Entry triggers, there are no entry triggers, so I'll delete that from yesterday's example. But trade data, we will be filling that on out as we go and get into trades. But as we are in trades, if you want to see what the stock exit level and the profit level is and all of that, you can come in here and see, what are the levels that have to be achieved for Jeff to go out and make a change, for me to go out and, either buy or sell or, do something with that particular position. So I'll be posting, this link into chat each and every day. Again, the link will change from time to time. So you will have to, grab the new refresh link. So if you're not seeing the data, refresh and you're not seeing new data come on, you probably have an old link, and just go to the chat feed. You can pull up the brand new link there as well. So anyway, that's that's kind of where things are with the challenge, with the market, and really kind of looking forward to getting things off and rolling here and having a great fall trading season and ending the year with a bang. Thanks for hopping on. Have yourselves a fantastic day, and I'll be back on with you here this afternoon at 2:30 Eastern. Talk to you then.